Hello everybody. Welcome back to the channel where we talk about stuff. We have a problem. We have a major problem. Over the weekend, you saw that things were already extremely shaky amongst all markets. At the time of me making this video, everything is actually collapsing. That's not a joking collapse, down by 1 or 2%. Most asset classes between stocks and crypto right now have fallen anywhere from 12 to 25%, even over the last couple of hours. There are a number of reasons for, there are maybe even far too many. We've gotten to the point where, as I stated this over the last couple of years, and now it's all kind of reaching an inflection point right in the center. There have been a lot of issues with the economy, the world's economy, everything for quite some time now. But now it's kind of coming to a head, if you will. So starting off, the one that's kind of in the center of it is the idea of what's going to happen to the United States in November and exactly what economic policies are going to be put in place. For those of you and it's actually far too long to cover, but it's the uncertainty of basically what's going to happen in November. That's also a core portion of a lot of what's happening right now. The idea of the fluctuations in interest rates is also causing a bit of a problem for a lot of world markets, as we've also been going over. The wider world has been expecting the US Fed, the people who print the money, to have lowered interest rates already, as we've been getting calls for a recession since around literally summer of last year. The idea is you keep the interest rate at a certain level to kind of not deter people from investing, but to have the market actually cool off. The issue is that the market already had a major cool off period in 2020 and 2021, and a lot of investors since then have become very skittish. It's kind of all over the place as far as the levels of greed. So any kind of dip that we have had in the market has been met by greed almost immediately after. And the problem is that the greed actually kind of peaked a couple of weeks ago, when you might have seen that Nvidia and a bunch of other tech stocks began to fall down, but Nvidia is quoted as the top of the mountain, as they went from I think a $300 billion valuation to over $3 trillion in a very short period of time. The idea of what AI can do is now coming, rather the market's coming to terms with what AI can't do. We are nowhere, I said this before, we are nowhere near where people believe that AI is actually supposed to be at this point, and therefore this is why a lot of the valuations of these companies begin to slide down. But when you have a massive slide down of 10, 15, 20% over the course of a couple of days and or over the course of a week or two, it begins to scare other companies as well, as we've also seen a bunch of other companies, a lot of companies. You may even know some people as well who are affected. I have a group of friends, and I want to say about 12 people who I know over the course of this year alone have been let off from their jobs. And these are smaller companies. All the mega companies, as well, as we mentioned before, are also going to be laying off a lot more people, especially right now. We just recently heard from the larger company 4 or 5 days ago who said that they're going to be letting off around 15% of their workforce, and it comes out to around 15,000 people. And when you see one company do it, the other companies try and mimic and do the exact same thing just to simply save money, because shareholders are always more important than the actual people who are working for these companies. So the interest rates right now, this is going to be a very pivotal week. It's not even remotely a joke. The markets reflecting the rest of the fear from Thursday and Friday. Saturday and Sunday, most markets are closed. You have the futures that are open, and the futures were also reflecting that things were going to go down. But the moment that markets opened, everything kind of began to cascade. And this is what we're also seeing within the cryptocurrency space as well. We're at the time of me making this video, like I said, many coins are down anywhere from 12 to 25%. On expectations and fears of what's currently happening in Asia, as their markets are also collapsing. And then we're also seeing this idea that we might not hear from the Fed anytime soon. No one knows if they're going to remark on what's been happening over the course of the last couple of days, because we have heard before from Jerome Powell. For those of you who missed it a couple of months ago, Jerome Powell, the head of the Fed, said, and I'm once again paraphrasing, I don't remember his exact words. He basically said he will do whatever it takes to uphold the integrity and the strength of the US dollar. And if it has to do with a market crash or some kind of a long-term recession, he's going to do it to make sure that the US dollar doesn't continue to inflate. But the problem is that everything that they've been doing over the course of the last two and a half years has not worked, and the US dollar is still inflating more than it's supposed to. And the consumer price index is also complete nonsense because it's not actually covering the things that people have to go over in their everyday lives, which are also constantly getting more expensive and are probably going to get even more expensive once interest rates drop. New money is printed, more money is pushed into the market, and inflation goes back up. It's like the loop that we can't kind of get out of. There's also a lot of issues around the world right now in specific places. This is scaring the markets collectively. A lot of people within crypto, as I've stated many other times before, tend to have this illusion going on in their head that world events don't actually affect the cryptocurrency market, and or crypto will simply just be able to slide by. Crypto is well attached and grafted onto the macroeconomic sector now, not only because of the ETFs, but simply because of like logic. We are a very risky asset class, as I've mentioned thousands of times before in many other videos. And now this is, people are realizing this now as well, even though they should have realized this back in 2020 when the stock market began to fall and the crypto market began to fall, and everyone was like, why is cryptocurrency falling? Shouldn't it be doing great? And that's not how logic works at all. So right now, at the time of me making this video, the Japanese central bank has risen their interest rate by 0.25%. The problem is that they had their interest rates at 0%, and it was not working out well for their economy. Apparently, it went relatively unchanged for a number of decades. But when you have it at zero and you're doing bad, the idea is to raise the interest rate to kind of, once again, as the Fed said that they were doing, is to kind of like cool off inflation, kind of cool off the market. The problem is, from the news that we've been getting over the course of the last couple of days, is that a lot of world markets were actually using cheap money from Japan with a 0% interest rate to invest in other markets. So if you knew that you can basically borrow money for 0% and put it somewhere else where you can make a 4, 5, 6, 7% return, you would do so. Them raising the interest rates has apparently spooked markets so much, and this shows the fragility of the actual markets in this entirety, the world markets, that raising it, they rose it by 0.25%. That's what it is now. Like, it's not like it's 7% or 8%. And this has shocked the entire economy into thinking that something must be wrong with Japan. The free money that they were getting from there that they could put other places now has like essentially like a tax on it. And we are back at the discussion of recession fears and depression fears. Now, I wouldn't go into depression immediately. I would say that we are probably going to be walking through the muddy waters of a recession for quite some time. The only real saving grace, and this is the only thing that's probably going to drag us out of this, is if we actually hear from the Fed sometime this week. And it's almost like imperative at this point, because markets will continue to collapse, and someone behind the scenes is going to like sound an alarm and be like, no, you have to do something right now, and or announce the anticipated idea of the interest rate falling sometime in September. Over the course of the last 12 hours, Bitcoin fell under 50,000 US dollars per coin. This is mainly because of the sell-off that we're seeing in the other markets as markets around the world slowly begin to open up. A lot of coins have actually broken their support completely. Now, we've seen this before in the cryptocurrency space. It's not like this is anything unprecedented. However, the timing of this is far too specific in that you might have noticed the crypto market has been doing well in the last few weeks, and we were moving up. It's because we are at the normal inflection point after a certain amount of time after the Bitcoin halving has taken place, where the market begins to move back up. And this usually rises until around January of the next year after the halving. That would be January 2025. And thus begins like the mega bull run up. However, the falling down the last couple of days as the cryptocurrency market is open 24 hours has been, I don't want to use the word catastrophic, but a lot of coins have lost any kind of support that they actually had. The idea being Bitcoin, for those of you who missed it a couple of days ago, the idea was that Bitcoin would never or wouldn't be able to fall below 63,000 again because of its support levels. These support levels had constantly been retested. We were always on the exact same line. And when you retest the support multiple times, it typically means that the people who have a lot of money are getting ready to make sure that these levels are secure so that they can push more money into the market, and then the market ends up going back up. We broke down below, what was it, 65? We broke down below 63. A lot of people were posting. I posted on Twitter. I was like, we broke below 60. Something is going on. And we broke below $50,000 last night as well. And when Bitcoin does well, if Bitcoin goes up by 4%, altcoins tend to go up by 15%, somewhere around there. If Bitcoin goes down by 8%, altcoins tend to go down by 20%. And a lot of them have broken the support levels that they had actually secured over the course of the last couple of months. And Ethereum also dove down, similar to Bitcoin, anywhere, depending on the chart that you're looking at, between 15 to 18%. I believe it broke under $2,000, if I'm not mistaken. Yeah, it broke under $2,000. Yeah, like I said, like this is a real issue. This isn't like a fly-by-night thing. It's something that the Fed should have done months ago. They're so concerned. I mean, there's thousands of layers to this. The issue is that the amount of money that was printed in 2008 and 2009 should have never been printed. The issue is that they made the exact same mistake in 2020 and 2021. The idea was just print a lot more money to keep the market afloat. But the problem is nothing was fixed. Nothing still has been fixed, and nothing is going to be fixed because that's the way that the actual system works. So the idea now is the money printer has to turn back on in order to like keep things sustained at an actual level where people are confident in the market once again. But when you print more money, when you lower the interest rate, inflation is going to increase once again. So we're back in this loop that we can't get out of, and the only answer is printing more money. And this is also part of the question, a part of the situation where the US is currently trillions of dollars in debt, and there's no real end to that as the debt ceiling continues to rise every single year or two. So we are in trouble. We are in trouble, and there is no way out of it. The only band-aid right now is for the Fed to announce sometime this week that they're going to lower interest rates in September. Because if they don't, if we hear nothing from the Fed over the course of this week, like near obliteration. This isn't, I'm not joking or trying to sugarcoat it in any sort of way. Like this needs to be fixed, and we need answers like sometime today or over the course of this week, or we are going to see like all new lows for every single asset class. Yeah, just thought I'd update all of you on what's going on. I know it's a lot. Believe me, I know it's a lot. I woke up to about 30 different text messages from people being like, what the heck is going on? And everyone's finding different answers as to like what it could be, but it's kind of everything smashed together. It's never just like one specific thing. It's everything else is always like rumbling in some sort of way, is very insecure. And you put the last piece of hay there and everything ends up collapsing at the exact same time. So, right. I hope you all manage to have a great day. I hope you take care of yourselves, as I've mentioned before. If you haven't started, which you should have if you've been watching this video or to this channel for the last 2 years, continue adding to your savings accounts, to your emergency savings accounts, to have like actual liquid cash on the side. As I've been telling you for a while, it wasn't even because I foresaw this event. It was just more of a no one knows what's happening. You talk about like a rainy day, but like when it actually comes, you need the actual money that you've been setting aside. Thank you all once again for watching, listening, liking, commenting, and supporting. And I will most certainly be talking to you all soon. See you.